Dirty dealings, corporate battles, consumer woes. This is Evening 5. The federal government plans to open up bids from the private sector as an alternative financing approach to help reduce the cost borne by the government in addressing the issue of high non-revenue water. Deputy Prime Minister Datuk Sri Fadillah Yusof told the press after the launch of the Water Sector Transformation 2040 that the majority of water-related projects in the country are still funded by the government. He said Putrajaya is opening up for the private sector to offer solutions to the government, including all the financing packages, not just to resolve the issue but also fast-track solutions in Malaysia. He explained that the government is looking at replacing old pipes with new, which would cost an estimated 10 billion ringgit. Non-revenue water refers to clean water that has been produced but is lost somewhere in the water distribution system and is not accounted for. The reasons for water losses vary, ranging from leakages, pipe bursts and poor water management to illegal connections and unauthorized consumption. Fadillah said the national average of non-revenue water is about 35% of total water supply, but in some states it breaches even 50%, costing the government about 2 billion ringgit annually in potential revenue. He said the government will provide grants to help states with more than 40% in non-revenue water to partly finance the projects to address the issue. The remaining states will be provided matching grants. Prime Minister Datuk Sri Anwar Ibrahim said the proposed 2% tax will apply to dividend income received from both listed and privately held companies. The tax, which he announced while tabling Budget 2025, will take effect on annual dividend income exceeding 100,000 ringgit received by individual shareholders. Anwar said in Parliament that the 2% tax rate was reduced from an initially proposed 5% in response to appeals from small and medium-sized enterprises. He said individuals who are expected to be impacted are generally those with assets exceeding 2 million ringgit, so they would only need to pay around 700 to 800 ringgit, a figure that is not too burdensome. The Prime Minister said this amid concerns that the proposed tax could hinder SMEs from expanding, as many business owners rely on dividends instead of salaries due to cash flow constraints. Touching on subsidy rationalisation plans and the threshold for the nation's top 15% income bracket, he said the Department of Statistics' baseline of about 13,000 ringgit in monthly household income may be too low from the government's perspective, and that discussions are ongoing to raise it slightly. Putrajaya may consider handing over undeveloped land within the 106.54 hectare Duta Enclave plot in Mukim Batu to Semantan Estate 1952. The Prime Minister said this is provided Semantan Estate develops it in collaboration with government-linked companies. Anwar also dismissed suggestions for excessive compensation to resolve the dispute, warning of potentially serious implications for the country and setting a precedent affecting other communities, especially with regard to Malay-owned land in urban areas. This followed a disclosure by PN Kota Baru MP Datuk Sri Taqiyuddin Hassan in Parliament that the previous administration had offered compensation of 5 billion ringgit, which Semantan Estate declined. The disputed land, acquired by the federal government in 1956 for 1.4 million ringgit, hosts several state facilities, including the Tun Razak Hockey Stadium, the National Archives and the Federal Territory Mosque. In order to prevent similar disputes in the future and ensure fair compensation, Anwar said the government is contemplating amendments to the Land Acquisition Act 1960. The bill is being reviewed by the Attorney General's chambers before it is presented to the Cabinet for finalisation. General insurer LPI Capital said its net profit rose 27% in the third quarter of FY 2024 from a year earlier, thanks to higher investment returns and lower reinsurance expenses. Quarterly earnings stood at 123.94 million ringgit. Revenue, however, was barely higher year-on-year at 499.83 million ringgit, amid a drag from currency translation of its Singapore operations following the ringgit's appreciation. In a voice filing, LPI Capital said it expects the fourth quarter to remain challenging amid intensifying geopolitical tensions. Distribution channels will be further enhanced, it said, to tap into the insurance needs of the increased domestic and foreign direct investments to drive sustainable business growth. The group's insurance subsidiary, Lonpac Insurance, posted a profit before tax of 130.2 million ringgit in the third quarter of FY 2024, representing a 28.3% increase from the year prior. The increase in profitability was contributed mainly by better insurance service results as compared to the third quarter of FY 2023, growing 25.9% to 111.4 million ringgit, as the net claims incurred ratio came in at 35.8% versus 39.4% previously. Fire and miscellaneous classes of business also contributed to the better insurance service results. Gross written premiums rose 3.9% to 465.2 million ringgit. Unisem Malaysia said its net profit grew 48% year-on-year and 60% quarter-on-quarter in the third quarter of FY 2024, thanks to higher sales volume and foreign exchange gains. The semiconductor device manufacturer recorded 26.75 million ringgit in earnings for the quarter. Revenue grew 15% year-on-year to 409.74 million ringgit, its highest since the last semiconductor upcycle in the fourth quarter of FY 2022. It declared a dividend of 2 cents per share, bringing the 9-month FY 2024 dividend to 6 cents per share. Despite the challenging macroeconomic conditions and geopolitical conflicts, Unisem said it expects its performance to be satisfactory in the next financial quarter. The group noted that the global tech sector is poised for significant growth in 2025, driven by the recovery in the smartphone market, accelerating electric vehicle uptake, and rising demand for data centers and cloud services fueled by AI adoption and digital transformation. Despite the strong rebound in the third quarter, Unisem's cumulative performance in the 9 months of FY 2024 was relatively flat year-on-year, with a net profit of 51.97 million ringgit, up just 0.3% from the year prior. Cumulative revenue rose 7.4% to 1.17 billion ringgit.